you still think the S&P could drop a lot further from here? 12.5% by my calculation. You've got 2,500 target on the S&P for year end. If not yesterday, what takes us there?
Well, to put it in context, end of last year, I thought we were well oversold. Recession fears were overdone at the end of the year. Our narrative has been a tale of two halves, rally first half, sell off second half. Why? China trade and the optics around it were a big reason for the rally in the first half, alongside the Fed pivot towards a more dovish stance. I think the Fed, short of new QE into the end of the year, has limited ammunition to prevent what I think is a normal cycle slowdown. And I think the optics certainly around trade with China have deteriorated. And frankly, the reason why the yuan above 7 is so important is it shows that trade wars become currency wars if they're prolonged. And trade wars, by the way, are neither good nor are they easy to win.
Now, Keith, you seem to think that the next round of tariffs actually is going to have less of an impact, if I read you correctly, than the first round did, though small business has been struggling. Is that a different read than we just heard from Peter?
I think this next round, what we had written is that the step up in May to the 25% tariffs on the original $200 billion, we found would have less of an impact than the original 10%. Why? Because firms reacted so quickly, and the initial tariffs were so disruptive. And so we saw the hit to growth materialize quicker and larger than we had originally estimated. I think the risk here is if we do see those 10% tariffs on the remaining $300 billion go into effect September 1st, the growth hit would manifest later in the year, and in particular in the first quarter of next year. Why? Because the tranche is a majority of consumer goods, which would affect retail, and obviously that's key around holiday season.